Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. It is Friday on a day when we have seen weakness coming through in the markets. Yesterday it was really a battle between the miners and the banks, with, I guess, the decline in the banks really sort of edging out the gains that we've seen in the miners. Today, though, a lot of the lithium players under pressure. If we have a look at where the COB 200 is, the ASX 200 is down by 62 points or 0.8%. And in fact, it's down by about 2.5% over the course of the week. So it hasn't been a great day, and a great week, I should say, and that really leads into our three themes of what a week when we've had so many things happening. And of course, we had the CPI and PPI coming in hotter than expected in the US. Everyone's starting to bet now when we will see these cuts coming through from the Fed. Interestingly, there's only something like a 60% chance now of a cut even in June. Today, though, as I mentioned, the mining stocks under pressure, particularly those lithium stocks. So miners digging somewhat of a hole. We also have that data through, well, not data, I guess, China leaving its MLF unchanged, and that concern about China's economy really weighing on investors' minds. We've got iron ore trading lower, the steelmaking ingredient extending price falls to $102 a tonne. So remember, quite a few analysts out there saying, look, we could test that $100 and that is going to weigh. But also these lithium producers tumbling on soft futures prices for lithium in China. Energy really the only standout today, and that was after we saw oil hit a 4-month high. And of course, we are on Friday, halfway through March, can you believe? And a lot of us that have been watching the market and the RBA for a long time are really trying to get our heads around the fact that the RBA is going to meet next week, not the first Tuesday of the month as it normally does. It's now meeting fewer times per year, and their meeting for March is going to be held on the 18th to the 19th. No change expected, but of course, what will Michelle Bullock and co say in the minutes, and what will Michelle Bullock say at the press conference, which yours truly is going to attend in Sydney. So if you've got any smart questions you'd like me to ask, please send them through, juliette@ausbiz.com.au, or you can find me on Twitter, X as it's called now, because I'd love to get your thoughts. There were quite a few people in the finance community that we're not overly impressed with some of the questions last time, so we'd love to impress you with a question to Michelle Bullock. All right, let's have a look at some of the sectors. I mentioned the mining stocks kind of taking a hit today. Fortescue down 2.6%, BHP off 1.5% there. Looking at the energy, that was a bright spot. Oil at a 4-month high on these IEA predictions of a tighter market in 2024. Santos and Woodside both looking quite good there. And then having a look at the banks, remember Macquarie downgraded the banks yesterday, which saw them smacked quite hard. ANZ steady, NAB coming back a bit, CommBank and Westpac still under pressure, Macquarie itself fairly flat. And a quick look at consumer discretionary stocks as well. What are we seeing in the consumer discretionary space? There we go. A little bit mixed. JB Hi-Fi, Premier looking good. Wesfarmers is down. Aristocrat Leisure down by almost 4%. Of course, it was in focus this week as well, and quite a few broker movements on that. Having a look at some of the corporate stories we've been following, EML Payments selling its underperforming subsidiary Centennial to go cardless for more than 30 million euros, saying the sale aims to boost its financial health and streamline its operations. Shares up by almost 10%. Iris announced a $164 million deal to sell its UK mortgage business to the Canadian private equity outfit Bain Technology. Shares actually up today by about 2%. I talked about some of the weakness in lithium players, and Pilbara Minerals down 6%, but it also accepted a pre-auction offer for spodumene concentrate, the buyer paying the equivalent of $12,000 a tonne. And Tabcorp shares were down by more than 5%. The chief executive there quitting the business on allegations he used inappropriate and offensive language. All right, let's get to our stock of the day as well today, because that was Pentanet, and Luke Winchester from Merewether Capital and Claude Walker from A Rich Life shared their take on the call with Nadine.
This is a nice announcement. The cloud gaming stuff has real promise. more of my focus is on that core telco business, really still in that turnaround phase. And before I'd be too interested in Pentanet as a a potential investment, you'd really want to see that core business turn around and see some growth in users and subscribers. But like I said, I think it's hard to say what it should be worth on an announcement like this. I think a lot of it's that NVIDIA name, but it's real in the sense of they'll generate revenue and profits from this announcement. So I would hold it if you're there. You've written it down a long way. This is a good announcement. The NVIDIA effect gives it a bit more of a pop than what it should. But if you're there, really focus on that core telco business. You need to see that turn around and get back to the profitability it had a couple of years ago. So yeah, I'd be on the sidelines, but if you're there, hold.
Because of the announcement today, I think that the move today is wild and not really related to the fundamentals. And overall, I wouldn't say that the continuation of this deal would make me change my view of this company, which would be to be pretty cautious of it until it becomes profitable. Just generally speaking, you've got to keep an eye on the actual free cash flow, because even if they have, say, operating cash flow, but they're spending more on graphics cards and software development, then they're going to run through their cash eventually. So for all those reasons, and it's a small company, it does have, I think, 2.1 million in debt, so it does have some net cash overall, but yeah, debt there as well, so fair bit of investing. I don't think it's out of the woods yet. I don't think it looks that great. So for me, I'd probably look at the hype today as an opportunity to get out if I was in there.
Welcome to the COB. Our Friday guest, Shane Oliver from AMP, joining us. Shane, what a week. We're down about 2.5%. I was talking about the fact yesterday it was kind of a battle between the miners and the banks. Today, some pretty good gains from energy players. But what's sort of been your take? I guess we've been reacting to these inflation numbers from the US too.
That's right. In a way, it's a bit odd in the sense that the US share market just a day or so ago was at a record high, and so far this week is still up. Similar story in Europe. Whereas our market has been hit quite hard. At one stage today, we were down more than 3% for the week. We've clawed back a bit of that to be down around 2.5%. But it's quite clear that Australia is it's obviously missed out on the AI boom. It doesn't have exposure to AI stocks, so it hasn't got that boost from earlier this year. And of course, then there's the iron ore issue sliding away, which in some ways is contradictory because the copper price looks like it's breaking higher. And that's normally a positive sign, but of course iron ore is going down and that's weighing on our big miners. And then finally we had that stockbroker sell or reiteration of a sell signal a couple of days ago, which is weighing on the banks, and that's weighed down the financials. So we're well and truly a laggard here in Australia, unfortunately, compared to what's going on globally. But more broadly, you could argue, well, markets are due a bit of a correction or at least a consolidation at some point. Given the strong gains we've had, maybe the Australian share market is leading the way on that, but who knows? But I think as things stand, I mean, my view hasn't really changed. I think this year will probably be a more volatile year than last year, a bit more constrained. But I think ultimately, with central banks still on track to cut interest rates from around mid-year, that should support markets, providing, of course, we avoid recession, which I think we will.
Shane, you provided us with a great chart too that I'd love to bring up, and you can perhaps talk us through it. In terms of the equity risk premium over bonds, you mentioned where Australia is in conjunction with European and US markets. Are we too expensive? Are we too cheap? What are you kind of seeing there?
Well, on the basis of the equity risk premium, which is basically the gap between the earnings yield or the forward earnings yield, so you take the forward PE and you invert that, that gives you an earnings yield, then you subtract the 10-year bond yield. And as you can see, in the post-GFC period, that averaged around 3 to 4 percentage points. And of course, more recently, particularly into late last year, we saw that come down dramatically as bond yields spiked, a bit of a recovery, and then recently it's come back down again. So it is actually quite low. You could argue maybe we're going back into a pre-GFC or 1990s sort of era, where the equity risk premium was around zero on this measure. But it does warn us that the market doesn't offer a lot of risk premium over bonds right now. And some might say, well, that's a bit of a concern given all the geopolitical risks around. The good news, I guess, for Australian-based investors is the risk premium for Australian shares is somewhat more attractive than it is for US shares, as you can see in the chart there. Just compare the red and the blue lines. So that gives us a bit of a buffer. But it's hard to know how much you can rely on that, because obviously the US share market's a more growthy asset or growthy share market given its tech exposure.
A very big week next week, Shane. We've got the FOMC, the BOJ, the BOE, and our very own RBA as well, which is going to be in conjunction with the FOMC, given that it's made its change. I'd like to get your take on that, but I also want to tap your brain for, if you were going to ask Michelle Bullock a question, what would you want to ask her?
Well, that's an interesting question. I must admit, I would ask her what she would want to see to get the confidence that they want. She has indicated that they're still waiting for more confidence that inflation is going to be on the right track. How much more do you need to see? Inflation has already come down quite sharply. Economy is slowed to a crawl. Unemployment is on the way up. How much more beyond that do we need to see before they can be confident enough to remove their tightening bias? And I think they still do have a tightening bias, because they're indicating that you still can't rule out further rate hikes. And at the same time, they're not talking about rate cuts, so that implies a tightening bias. That to me would be the big question: how much more they want to see before they get that confidence.
And what are you expecting in terms of just the big week of central bank momentum?
Well, I think a lack of momentum is what we will see, except perhaps in the odd one out, which of course is Japan. Japan hasn't even started to raise rates yet. The money market has attached a probability of a hike. It's hard to know whether Japan will move in 25 basis point increments, but when I last looked, the money market in Japan was implying that their negative deposit rate of minus 0.1% would be raised to around 0.06%, which is just over a 15 basis point rate hike come next Tuesday, same day as the RBA. So that's, if anyone's going to do anything interesting, it's probably the BOJ. I think all of the rest, the Bank of England, the Fed, the RBA, will offer something along the lines of, we're still waiting for more confidence before we move on rates. And of course, Australia and the Bank of England are laggards in that sense, laggards to some degree, in that the Fed has already moved to a neutral bias, whereas the Bank of England and Australia still have, you could argue, a bit of a tightening bias.
I noticed you had an interesting piece out, or actually Danny brought it to my attention, on Bitcoin earlier in the week. I mean, Bitcoin hitting another record overnight. Some interesting figures in the crypto space too, with the Aussie being ruled that he did not invent it in a UK court. Your take on all the momentum we're seeing around crypto?
I have read one story where someone claimed it was actually invented in the US, in a US government agency, and it escaped from a bit like LSD was invented by someone in America. US government ultimately, I think, invented LSD, and then of course had to ban it several years later. But in any case, there's all sorts of theories around who invented Bitcoin. But I mean, my take on it is this, and I guess you have to give it some benefit of the doubt because it's now been around since 2009. So it's starting to see longevity on its side. It's seen several 80% or near 80% corrections, I think 4 so far, and then managed to bounce back again. But you still have the question as to what it really is. And I can't see it ever being a currency that you use to make payments for. I can't see it underpinning smart contracts the way that, say, Ethereum or others might end up doing. I can't see it being central to decentralized finance. And in fact, Bitcoin has done all that it possibly can to make it less amenable for use in those sorts of things. It still takes something like 8 minutes to do a transaction. It can cost around $9 a transaction, whereas the others have found ways to simplify it a bit. Now, the problem is when you simplify it and speed it up, it loses some of the attraction. And I think a lot of the people who are really, really into Bitcoin actually see it as an alternative to gold, a digital alternative to gold, except you can't touch it and feel it and see it. But it's easy to move around and more divisible than perhaps gold is. So in that sense, it's easy to manage if you have faith in the digital crypto landscape that it operates in. So if you're someone who's wanting a decentralized store of value outside of control of governments, then maybe Bitcoin is for you, just like previous generations it was gold. And if it's taking money away from gold, then it has a lot more upside. But I think for most investors, it's very hard to rationalise its value. It could be worth $100 or $1 million. It's extremely volatile. It's something like 13 times more volatile than the US share market, 25 times or so more volatile than the Aussie dollar or the US dollar exchange rates, many multiples times more volatile than gold is. So you have to go in with your eyes open, and you have to have a little faith. As George Michael says, I've got to have faith. That's what it is. It is almost like a religion, that new buyers will come along and keep pushing the price up such that when you want to sell it, it'll be at a higher level and not at the end of an 80% correction. So you really need to go in with your eyes open. I must admit, I'm still a bit of a skeptic. I think there is something in blockchain and the technology that associated with that, but I think it's going to more likely be other cryptocurrencies that get the benefit of that. It's just very hard to work out which one it will be because there's currently about 10,000 of them.
Indeed. All right, Shane, thank you as always. I mentioned earlier that I thought the Craig White claim was a bit like Romeo and Michelle in saying they invented Post-its, and that went over like a lead balloon. So I feel like I need a night cream because nobody got my joke, but I'm glad you got it. Have a great weekend. Thanks so much, Shane Culliver from AMP. All right, let's get you caught up on the market leaders and laggards. Telix Pharmaceuticals up 4%, Beach Energy, Centuria Capital, Deep Yellow, Arena REIT, all looking good. To the downside on a down day, a lot of the lithium players that we touched on, and Tabcorp as well, down 5.3%. In the smaller end of town, Race Oncology racing up by 18% almost. EML Payments, we touched on that story, up by about 10%. The losers in the small cap land today were Sierra Resources, Neometals, Lake Resources, Fluence and 88 Energy. Let's get you caught up on what we can expect overnight. UK consumer inflation expectations, import prices and manufacturing data, along with consumer sentiment out of the States. And then, of course, it's a really big week next week in terms of central bank meetings. We know we've got the RBA policy meeting and decision coming through on Tuesday. PMIs for March come through on Thursday, and the key jobs data also out on Thursday. Globally, China retail sales, the BOJ meets, and Shane said, of course, that's the one to watch because they're probably the only one that is likely to potentially move. China also comes through with its 1 and 5 year loan prime rates after leaving the MLF rate unchanged today. The FOMC on Thursday, and also worth pointing out the Bank of England out next week as well. So we will be very busy bringing it all to you on ausbiz. In the meantime, please do enjoy your weekend. But of course, let's just check in on where the markets are before you do that. Down 0.6%. The ASX 200 is off 0.8%, 7,651. It is down 2.5% over the course of the week. And let me just refresh to make sure that is definitely the closing price. I'm sorry, it's only down 43 points on the close, or 0.6%, 7,670 points. All right, as I mentioned, do have a great weekend, and remember you can catch up with all our interesting interviews online, ausbiz.com.au. We'll see you from 9:40 a.m. Eastern on Monday. Have a great weekend.